If you're looking at applying to Portugal's Golden Visa in 2026, then today's video is going to be absolutely essential viewing. A lot has changed in the investment landscape recently, and choosing the right place for your hard-earned cash can be rather intimidating if you've never invested in Europe before. Today's video will give you the necessary grounding to understand the context and what to look for, and the key traps to avoid as well when making your Golden Visa investment. We'll also run through some of the most common use cases at the end of the video, so make sure you stick around to the end because that might apply to you. This will be one of my more ambitious videos, as we have an awful lot of information to cover in our relative limited amount of time that we have together. Some of it is complicated, but we will do our level best to make it as easy to digest as possible. We will start with a very quick recap of the qualifying investment rules for 2026 so that we understand the possible categories for our investment. Next, we'll conduct a high-level overview of the Portuguese economy. Most of my Golden Visa clients are coming into this with almost zero prior knowledge of the Portuguese economy, so it is important that we start changing that. After that, some key trends that we've observed over the last 5 to 10 years so that you can understand the direction of travel of the Golden Visa itself, before then diving into an overview of the types of Golden Visa investment fund that you will find when exploring the market. This should give us some grounding in the topic. After that, we'll then be able to dive a little bit deeper, so looking at the main considerations to bear in mind when selecting your Golden Visa investment. Now, this will involve understanding Portugal's main economic sectors, the costs involved in your investment, the risks, the exit strategies, return profiles that are possible, security mechanisms that can be on the table, and more. After that, we will spend a few minutes exploring the topic of risk. Remember, the Golden Visa is a multi-year investment, so you must have a solid understanding of the risks involved with each investment option before you commit ultimately to a choice. We will look at a rather specialist subject next. It's becoming more and more relevant. It only concerns American investors and whether their retirement savings can be used for the Golden Visa. Our US friends are now around 3/4 of this channel's audience, so please forgive me if you are not American, and feel free to skip this section, but if you are, you might want to give that a watch. We will then tie everything together by looking at 3 concrete fund examples. Now, each of these will demonstrate how a different fund approach will be suitable for different investor circumstances, and hopefully give you some inspiration when you embark upon your own investment selection journey. Of course, do not rely on videos such as this to make your decision. Always seek your own tailored advisor. After that, we will wrap up with some recommended next steps should you want to go a little bit further into the topic, contact information if you'd like to work with myself and my team, but we'll get to that when we get to the end of today's session. However, to set the scene, and before we get started, you might want to check out my PDF guide for a little bit more reading. It's called The Complete Guide to Portugal Golden Visa Investments. It is a free downloadable PDF guide that gives you a detailed walkthrough of the main investment categories that qualify. We are going to talk about this today. Key considerations on risk, cost structure, security mechanisms, a breakdown of the leading Golden Visa investment options that are available today. That includes funds, structured investments, and everything in between. Also, how to choose between a fund and a direct investment or other alternatives in the market, real figures, capital requirements, potential for returns. We'll also cover everything that you need to know about obtaining permanent residence and citizenship in the long term. So you can download this using the link in the description box. It's down below my head if you would like to grab a copy. And whilst it is free, I will ask you for your email address so that that PDF can be emailed over to you. Full disclosure, I will send through a couple of follow-up emails. The reason for that is simply to give you some useful information after you've downloaded the guide. These will stop after about 2 weeks unless you tell us to keep you on our newsletter, in which case we will stay in touch. Anyway, that's enough plugging the free PDF. Let's begin now with a quick recap of the qualifying investment categories for the Golden Visa in 2026. The viable routes, as it currently stands, are the following. Firstly, job creation. This involves creating and maintaining at least 10 permanent positions of employment in Portugal. Doesn't really match well with the main advantage of the Golden Visa, which is the ability to gain residence, temporary residence initially, then permanent residence, and ultimately citizenship without ever living in Portugal. Job creation is quite a hands-on option, so not very popular, that one. Even less popular, however, is the research activities route. Why? Well, it's because it entails an effective donation of €500,000 to scientific research institutions. That's an awful lot of money for no return. Next is another effective donation, this time at half the price point, €250,000 into a cultural heritage initiative or into the arts. Again, not usually a smart play given the high sunk cost. Option 4 is the most accessible option for most people in my experience. Those are investment funds. This requires you to invest €500,000 into a non-real estate mutual fund that is regulated in Portugal via the CMVM, i.e. the Securities Market Commission, and that fund must invest at least 60% of its capital into Portuguese listed securities. Now, this category carries a unique set of challenges and considerations for investors, deserves its own dedicated video, which is actually why we're here today. So we're going to be diving into that and all the hairy details that we need to cover. But just for the interest of completion, there is another category 5, which is corporate investment. Here you can invest €500,000 into a Portuguese company directly, and provided that that investment is used to create or maintain at least 5 permanent jobs, qualify for the Golden Visa. Now, options 4 and 5 are by a distance the most popular. Option 4 is now head and shoulders above everything else for reasons that we are going to go on to explain in a couple of minutes. However, we need to set the scene now and discuss the context in which we are making the investment. Let's talk about Portugal's economy. Is this an investable country after all? Well, the fundamentals might actually surprise you when we get into it. Now, in recent years, Portugal has actually been a rather high-growth European nation, with an average economic growth of around 2% per year over the last 10 years. Its post-COVID recovery was particularly strong, and it compares rather favorably to the wider EU, which delivered around a 0.8% annual growth over the same period. In fact, Portugal's growth has more or less kept pace with the USA, and we know just how well that has done in recent years. The main index in Portugal is called the PSI, sometimes referred to as the PSI 20, as it contains just 20 stocks. Obviously, that is considerably smaller than the S&P 500, for example, which contains 500 companies, of course, which means overall index performance is more greatly influenced by the performance of individual companies than other larger indices that you might find around the world, potentially a little more volatile, therefore. That said, the index is much heavier weighted towards value stocks, so established businesses, often paying stable dividends, which does reduce that possibility for volatility down a little bit, at least going on recent history. Growth in recent years has been healthy within the PSI, with an average return of 6.3% over the last 10 years. Quite impressive, really, when you factor in the unemployment rate in the country, which currently stands at just over 6%. Now, that is in line with the rest of Europe, but actually considerably higher than the USA, which sits at around 4.5% at time of recording. So there is an argument to be had that Portugal actually has a large untapped potential. Imagine what type of growth could be achieved if that employment rate actually came down and was more in line with the USA, for example. We can conclude, therefore, that Portugal needs jobs. This is one area where the Golden Visa makes an awful lot of sense for the country. Why? Well, inward investment is often responsible for creating those jobs and therefore driving the economy forward. One interesting side note is the cost of labor in Portugal as well, which is actually very cheap. Interesting combination with such a high unemployment rate. The average salary here is just under €25,000 per year, which compares to €40,000 across the wider European Union. When we put all of this together, we see quite an interesting picture beginning to emerge. So low wages, cheap goods and services, strong recent growth, frictionless trade with the rest of the EU under the common market. Portugal is quite clearly a country with a rather high growth potential in the current context. The economy has therefore not fully matured, making this a rather attractive investment destination, certainly worthy of consideration. And that's before we even talk about the benefits of the Golden Visa. This picture becomes even more interesting when we look at how the economy breaks down into its various sectors. Now, Portugal is very much a service-driven economy. That's illustrated by the fact that tourism and hospitality is its primary sector, responsible for more than 20% of its economic output. Value-driven sectors are also highly relevant, so we can see here retail, financials, the manufacturing sector also taking a large share. We are now seeing an increasing relevance of the technology sector in Portugal now. That's something that's been growing in recent years. It will be interesting to see just how that continues to grow and take on more relevance in the years ahead. It's certainly not inconceivable that Portugal will see more of an emergence of growth stocks, tech stocks in the year ahead. This is far from guaranteed, but as I've mentioned, the economy, the major players in the economy in terms of private sector and private businesses are generally more value tilted. So we may see that balance start to shift. The remaining sectors, as you can see on this chart, are far less relevant. So the construction and energy sectors play a significant role, but in terms of overall impact on GDP, this is rather limited versus the other sectors that we have already mentioned that you can see on the screen here. So that's a quick initiation into the Portuguese economy, how it's made up. We could go an awful lot deeper, but we are a little bit limited in terms of how much time we have together today. Hopefully that gives you the necessary grounding. The recent growth in Portugal's economy is also reflected in the growing appetite for the Golden Visa. This is driven by a couple of reasons. Firstly, the attractiveness and clear potential of the Portuguese economic ecosystem, but also secondly, the fact that the Golden Visa has remained steadfastly accessible, offering a low-resistance pathway to a permanent residence and ultimately European citizenship without ever having to reside in Portugal. And all of that in a context of hardening borders around the world where countries such as Ireland, Spain have actually shut down their investor visa programs completely, the likes of Greece making it harder and harder to access theirs. It is therefore small wonder that the Portugal Golden Visa has seen increasing applications and approvals year over year. And when we add in the fact that more and more Americans are becoming disillusioned with life in their home country, or at least open to the idea of a plan B, looking for an escape route to Europe, then you really do have all the conditions to make Portugal's Golden Visa program a roaring success. So it has been, and that's reflected in the data. The investment pathways taken by Golden Visa applicants, however, have shifted during this time, with a natural and gradual transition away from real estate and into investment funds instead. You'll remember that I said investment funds are now the most popular Golden Visa investment category. The latest figures demonstrate that they held a 78% share of all Golden Visa investments as at the end of 2024, latest available data at time of recording. A good chunk of the remainder is the corporate investment category, which has also proven popular. Next would be the cultural heritage donation, which makes up the long tail along with job creation and scientific contributions. Now, I would imagine that many of you would say to me, Jonathan, but of course this is the trend. They abolished the real estate route back in October 2023, and I would of course agree with you on that. That 78% figure would be an awful lot lower if real estate was still on the table. There is no doubt about that. But we can clearly see that the investment fund route had already been gathering popularity well before those laws came into effect. We can clearly see that well, if we look quite simply at the graph here, the fact that law change came in October 23, we can see that there was already that tendency towards investment funds before that came in. A lot of that is driven by Portugal's major fund houses waking up to the massive potential of a Golden Visa compliant offering. They simply were not offering that before, and they were bringing, therefore, new funds to the market with the objective of offering a Golden Visa compliant product. Indeed, and this is a rather interesting point to remember, you will find that a good number of the credible Golden Visa investment fund options were only created in that period between 2022 and 2023. Coincidentally, this is around the same time that rumors around the rule changes were circulating, which of course encouraged fund managers to begin exploring the potential advantages of offering an option for the Portugal Golden Visa program. And right here in 2026, we now have a much more mature fund ecosystem for the Golden Visa with a number of attractive options to suit a wide range of investor preferences. From an optionality perspective, it really is a good time to be in the market. So, investment funds were already gaining in popularity even before they became the de facto go-to solution for Golden Visa investors. So let's try to understand them a little more. Firstly, by looking at the types of fund that exist. Now, I prefer personally to break these down into 3 specific types. This is not an exact science. This is just my own personal way of explaining the market, but I feel it's useful. Those 3 types are classic funds, sector-specific funds, and alternative funds as well. And by classic funds, I mean your typical mutual fund style approach. This could be a fund that invests in stocks and bonds, another type of mixed asset portfolio, or one that invests 100% into the stock market. Hedge funds, also an option, essentially a more aggressive take on a classic fund. Think higher costs, greater risk, but also the possibility for higher returns as well. Now, what's good about these funds, the classic fund style, is you get a good level of diversification, typically within a structure that is usually quite easy to understand if you've done some investing before. That said, these funds do tend to carry the highest cost in the Golden Visa market. They do require a lot more engagement from a fund manager, and you need to pay for that management that takes place. The investment approach may also be rather intransparent. That depends from fund to fund, but you do see it. And you could be exposed to quite a lot of volatility as the value of your investment rises and falls. These types of funds are certainly not for everybody. The second type, sector-specific funds. Now, this is a fund that would specialize in investments into a certain activity. For example, the energy sector, technology, even hospitality. And as we have seen, the hospitality sector may be an interesting one to examine, given its relevance to the overall economy. Tech as well, given the fact that it is emerging and taking a larger and larger share of that pie. For now, though, sector-specific funds are usually leaner, more flexible than classic funds. Why? Because they're investing in fewer options, and the fund manager often has far greater influence in strategic decision making. This influence can often mean as well that investors can get access to far more favorable investment cases than is otherwise the case with a more classic fund. The flip side of this is because we are not typically investing in as many positions as we would with a classic fund. We are therefore less diversified. Sector-specific options may also be cheaper as well, given that the fund manager may not need to actively trade in and out of stocks to try to beat the market as they would with a classic fund typically. And if that's the case, they would not need to therefore charge as much to run the fund because it's less labor intensive. And finally, the third vertical here, alternative funds. The most common type of alternative funds, as I see it, are sustainable projects, farming projects, education funds as well. These allow you to invest into a cause that you care about. This is a little bit more, not quite philanthropic investments, but certainly investments that carry some kind of social cause or a cause that can mean something to an investor. What this means is that you're ultimately investing into a cause that you would typically care about. However, the underlying financial case is usually a little bit weaker. Depends, obviously, case to case and where it is that you're looking to invest. We're going very specialist with this type of fund. This is a very niche investment. But what I would say is that it's usually only appropriate in someone's financial plan if you have a very high net worth position to begin with, if you can afford to allocate 500,000 euros in such a way. Because for most people watching this video, most people undertaking a Golden Visa, 500,000 euros would be a significant chunk of their net worth, and you would usually want to follow best investment principles when it comes to using that money wisely. That usually means diversification or looking at sound investment fundamentals. Not necessarily the case when we go so specialist as to look at something in the alternative space. Of course, investment funds are inherently more complicated, more difficult to understand than real estate investments, for example, which means that it can be a little bit more daunting to actually take a decision on what fund is right for you, if any. So there are some key questions that I would like anyone watching this video, looking at a Portugal Golden Visa, I would like you to ask yourself these questions when selecting the fund investment for the Portugal Golden Visa. The first one, really important, of course. you must understand where your money is going. So what does the fund invest in? Do I like this industry? Is it ethical? Do I get a good feeling by putting my money here, supporting this particular sector? And perhaps even more importantly, do I actually believe in the future of the sector? Does it have a bright future? If you are happy with the philosophy and the potential future of the industry you're investing into, then we can move on to the next question. Costs. Costs are an important one whenever we make any type of investment. And as I have mentioned in previous videos, and I will go on to speak about, cost can be a rather big consideration that can dramatically affect your investment experience, either positively or negative. A few percentage points can make a lot more difference than a lot of people realize when they embark on an investment journey. Golden Visa investment funds, it is important that you know, can be on the expensive side when compared to investment funds that are not tied to an immigration objective. Many Golden Visa investment funds can levy high entry fees that eat into your capital from the outset. Even exit fees when you come out of the fund, annual management fees can be high, and just to add some insult to injury, performance fees when the fund manager does deliver a positive return, does their job correctly, that can eat into your potential gain. I have seen it in the past. Thankfully, it's not that common anymore, but I have seen performance fees as high as 50%, even 100% in some cases. Thankfully, the market is maturing and we're seeing that less and less. But do be aware of that because if you were to have a performance fee at 100%, of course, you wouldn't see a single cent of the outperformance of the fund, which to me, that is a little bit crazy. Anyway, the various costs can add up fairly quickly. We don't do that with the funds that we offer as part of our offering here at Holborn. We prefer to work with fund providers that are more reasonable, transparent, and we always make sure that we outline any costs involved with any investment that we would introduce to our clients. But regardless, do make sure that you understand the costs of any investment before you actually commit to any decision. Once you're comfortable with costs, it is important that you understand the structure of the returns you can expect. This can also tell us a fair amount about the level of risk of a fund as well. So are returns guaranteed? Are they paid up front? If yes, this is a good indicator of the confidence of the fund manager to deliver on their promises. If not, you may be in for a bumpier ride. Make sure that the investment is in line with your attitude to risk. Of course, if the fund is tied to market performance, then it's quite normal to see the value of your investment going up and down. It really depends on the nature of the fund that you're investing into. But regardless, here's the old cliche. Past performance is not a guarantee of future returns. However, that being said, it can give you some insight as to the credibility of your investment partner. So in your position, I would always cast an eye over performance history of the fund you're looking at. And if the history isn't extensive because the fund was recently conceived, I mentioned the bulk of Golden Visa compliant funds were created in 2022, 2023. If you do not have extensive performance data there, do look at the performance history of the fund house themselves. That can give you a bit of a clue as to the credibility and reliability of the partner that you're using. Of course, past performance, no guarantee of future returns, but all information is helpful. Next, lock-in periods, also key. Many Golden Visa funds will require you to stay invested for a period that can be up to 10 years, which would mean that you cannot access the capital easily once you no longer require the Golden Visa investment. Now, if that were to happen, that could be potentially infuriating, even force you to make some pretty major lifestyle decisions if a significant amount of your capital is tied up for an excessive amount of time. So please be mindful of this point. If you're not sure, ask the fund manager for clarification. 5 years, 6 years as a commitment period is typical. That's more in line with the Golden Visa journey. Anything beyond that, I might question a little bit. 7 years, totally fine. But beyond that, you start getting a little bit more questionable. Speaking of fund managers, it's always good, of course, to run your own due diligence on the people behind the investment that you're looking at. Not all fund managers are created equal, of course. Just like every profession in the world, there are good ones, there are bad ones. Looking into their past performance is always a good idea. Just get a feel for who it is that you're dealing with. Lastly, importantly, what is my security? Do I have 100% capital at risk? Are there guarantees underneath the investment? With most fund investments, your capital is 100% at risk. That is the case with most investment funds around the world. Some funds will offer capital protections or guarantees that can minimize your risk, but you usually end up paying for that through the cost structure and performance fees of the fund. So, if capital protection is important to you, it is important to understand what would happen to your money in a worst case scenario. Could you lose it? Are you protected? Ask these questions before you commit to a decision. Okay, looking at some practical options now, I'd like to start with a natural option for many investors, particularly those that are used to investing via ETFs or similar structures, and that's multi-asset funds, also called mixed asset funds sometimes. Now, these funds will hold a wide range of assets, often across different countries, sectors, and asset classes like stocks, bonds, gold, etc. Now, the first benefit of such an approach is the potential for geographic diversification, where they can take advantage of the fact that only 60% of the fund's assets must be invested into Portugal to qualify for the Golden Visa. What does that mean? The other 40%, therefore, can be invested internationally, thereby reducing your risk against the possibility of an economic shock in Portugal. Secondly, diversification across asset classes and sectors as well in the economy. This allows us to effectively capture whole of market performance, which can sound a little bit boring rather than trying to beat the market. But this means that we can reduce the impact of volatility on the investment and achieve smoother returns by investing into a variety of non-correlated assets. Now, the way that that is done will depend fund to fund, but we're trying to keep this as high level as possible. Thirdly, consider that these funds will usually invest into publicly traded assets, which makes them very liquid and easy to exit if needed. You can usually, therefore, sell your position when it suits you, bringing your exit forward if you need to access the capital in an emergency, or extending the investment journey if you so choose towards the end of it. Of course, this does not typically apply to the higher risk approach that you would usually see with a private equity driven strategy, where your exit will typically occur at a predefined date. Lastly, the transparency of reporting. Now, multi-asset funds will typically allow you to track performance easily via regular updates from the fund manager, typically a newsletter, or via an app or online portal. This can give you peace of mind knowing that you can track the value of your investment, especially when you're investing overseas. Another option that many of you watching this channel will already know is that I personally find hospitality as a compelling option to consider. Just recapping why that is. Feel free to disagree, of course, but number one, track record and relevance. As you know, because I've told you, Portugal has a very well-established and robust hospitality sector, which is responsible now for more than 20% of the country's GDP. That's in excess of 40 billion euros per year. Considering that we need to invest in a fund that invests in at least 60% Portuguese securities, there is an argument to say that you'd be better off investing into sectors where the country excels. Hospitality is a great example of this, and given the amount of share of the economy, the amount of share of GDP that it constitutes, there is a fair argument that says you should have at least some exposure to hospitality in your Golden Visa investment. Next is reliability. Now, an interesting fact about the hospitality sector is that it relies on both foreign and domestic demand, which can insulate it from shocks and make it a more dependable sector if things ever get a little bit dicey with the Portuguese economy, which is, of course, a comparatively small economy when we compare it to powerhouses such as the USA, for example, and therefore more prone to such shocks. Hospitality has shown itself as well to be very resilient in hard economic times. Holidays have proven to be one of the last things that people tend to give up when money becomes a little tighter. So that's great news for people looking for a future-proofed sector to invest into. Thirdly, predictable cash flow models. It is very easy to project and to chart hotel performance, especially when we're talking about large capital assets that have a long history of trading. Now, in turn, what does that mean? It means that some operators could offer investment yields that can be paid up front. Wonderful news for investors as it passes a significant amount of the investment risk onto the hotel or tourism operator themselves. This is something that my team and I work on to achieve for our clients whenever we can. Lastly, investor fringe benefits. Now, many hospitality funds offer additional benefits to the investor because they can. It's quite easy given the nature of the business. Now, that would usually constitute free vacations in the hotels that are the object of the investment. This can allow investors to meet the 7-day per year physical stay requirement for citizenship in style, again, with the minimum fuss as well. Now, if you happen to invest in a higher end hospitality proposition, that can be quite a nice little fringe benefit to have. Again, great for all concerned and a nice little win-win. Now, before we look at some concrete examples, I'd like us to talk about a key topic, which is risk. Now, I'm assuming that everyone watching this is familiar with the concept of risk, which we can loosely define as the likelihood of incurring some kind of loss during an investment journey. It is, of course, a lot more nuanced than that, but that will do for now. When we're investing in a Golden Visa fund, generally speaking, there are 6 different types of risk factor that you should assess before making any kind of decision. These are performance risk, concentration risk, management risk, credit risk, counterparty risk, and the risks associated with the costs of your investment, also known as the hurdle rate. We will define these together quickly. Firstly, performance risk. This is the classic risk that might be what comes to mind when you think of the stock market. The value of any investment can always go down as well as up. And this is why, this is the risk essentially of investing at something at one price and then having to sell at a lower price because it hasn't met your performance expectations, hence performance risk. Next, concentration risk. This is the effect of effectively this is the effect of essentially, I should say, having all of your eggs in one basket. Now, let's say that you were investing all of your money into a certain type of good. Let's pick apples, for example. It's one that I typically use. Let's say Granny Smith apples. Not a smart decision because the smallest fluctuation in the value of Granny Smith apples will have a huge impact on your net worth position. So therefore, you might choose to split your money across the apple market. You might go into Granny Smith's, Bramley Apples, Pink Ladies, Gala. That's certainly better. But you are still overly exposed to the performance of the apple market as a whole. True diversification would invest your money across not just apples, but also oranges, but also dairy produce, but also utilities, the banking sector, the retail sector, and get across as many different verticals as you possibly can. That includes as many unrelated industries where an impact on a certain market would have a reduced impact on an unrelated industry. So that essentially when something happens to the Apple market, taking the example, your net worth would not be hit as hard. It is worth noting that diversification is good for mitigating this type of risk, but it can, however, limit your returns. There are a few different actors in the world of investments that say diversification is for dummies, but I personally don't subscribe to that way of thinking. The rationale behind that is that a lot of people feel that if you want to deliver stronger returns, if you want to really beat a market, then you can't diversify. You have to specialize and commit to something. That's a much higher risk approach. What we're talking about here is mitigating risk. It's entirely dependent on investors and their preferences. Anyway, let's not get sidetracked. Management risk next. This is an easy one. Can I trust my fund manager to manage my money responsibly? Is he or she competent? Credit risk is the next one, which is essentially the risk of your returns not being paid out by the company managing the investment. Think when a bank goes bust, for example. They have your money, they have the interest, but they might not be able to pay you out because of their own internal reasons. That is credit risk. Counterparty risk is next. Will the company I'm investing in still be trading when I need to exit my position? Now, let's say that I'm investing into a hotel project. Let's say it's a term of 6 years. I want to be sure that the hotel is still operational or that the wider hotel business is still operational so that I can recover my funds after I get my permanent residence, after I get my citizenship, after I want to exit the investment. And finally, of course, hurdle rate. This isn't technically considered a risk factor, but it is a consideration when making an investment decision. The hurdle rate is effectively the rate of growth that you need to see in order to break even on your investment. As I mentioned, Golden Visa investment funds tend to carry rather expensive fees, so you need to be aware of the impact that that would have on potential for performance. So basically, the higher the cost of a Golden Visa fund, the higher the hurdle that the investment needs to jump over in order to deliver a profit to you, the investor. So let's say that we have a fund where the cost is 2% per year. The investment needs to grow by at least 2% per year in order to then give you a return thereafter. So that is the hurdle rate. So how do we mitigate these risk factors? Well, let's look at performance risk first, quite a straightforward one. You want to invest in quality, established businesses with good track records and proven models in proven sectors if you want to mitigate this risk factor. As we know, past performance does not guarantee a future return, but it does help to give an indication of the level of risk that we're taking on. Concentration risk, also straightforward. If this is a concern to you, you might want to consider diversifying your position. Make sure that you are not committing too much of your net worth to one particular investment asset. The best way to do that is to talk to a trusted advisor that can construct your portfolio in a smart way, or perform a look-through analysis on a potential investment before you commit to it. Next, management risk. So essentially, if you want to manage this, perform due diligence checks on any fund manager before you commit. You want to be sure that you're dealing with trustworthy people like you would with any business deal. I mean, common sense, would you not agree? Credit risk is a little bit more interesting. This is where I would recommend looking for investments that could potentially offer you an upfront return. Not always the most common, but what that would mean is that you are paid before the investment journey. This would completely eliminate credit risk, but it is also a good indicator that you're investing into a solvent quality project. Counterparty risk can be eliminated again through good due diligence on the fund manager and the projects being invested into. And the hurdle rate, of course, can be reduced by prioritizing low or zero cost investments. So to summarize then, bring it all together, invest in quality, diversify where appropriate, do your homework on the people involved, and prioritize low cost investments that offer the possibility of upfront returns if you can find that. If you do these things, you should be in a better position than most. Moving on now and shifting focus to a specific use case. Now, more than 3/4 of our new clients for the Portugal Golden Visa are US nationals, as I've mentioned. And a common question that I'm frequently asked is, can I use my IRA or 401k to make a Golden Visa investment? Now, many people do not have a spare 500,000 euros just sitting in post-tax accounts, but using retirement savings is a very different matter entirely. So I understand the interest, I understand the question. And as a result of that interest, many funds are now marketing themselves as 401k compliant or IRA compliant, which is one of the reasons why I chose to include this in today's presentation. In practice, what this actually means is that they operate one of two structures known as jumbo accounts or custodian accounts. These structures effectively allow you to use a self-directed retirement account to place money directly with a fund manager in a compliant way as regards Golden Visa legislation in Portugal. Now, given the huge potential tax savings of using retirement funds in this way, this is becoming a very popular investment mechanism among the American audience. And the mechanism itself would usually look something like this, at least these days. It's gone through a few different iterations, but this is now the most efficient mechanism that is being used. So the investor would take their 401k or IRA in the US. They would then roll it into a self-directed IRA or a solo 401k in the USA. This self-directed account can then be used to send capital, to send money to the fund's jumbo account or custodian account, which can then place an investment into the fund directly under the investment's name and on their behalf. Now, using pre-tax funds for a Golden Visa investment is clearly a very tax-efficient way of making the investment, as long as it is done in a compliant way. However, just a word of caution, it is the investor's responsibility to ensure tax compliance on the US side. Now, I do not provide US tax advice, and this video is by no means tax advice either. So also consider that a Portuguese fund manager has no fiduciary responsibility to you as an investor. They are not liable for any non-compliance on the US side. So make sure you do your own due diligence before proceeding. Whilst any non-compliance in the US would not jeopardize the Golden Visa in any way in Portugal, there may be potential penalties on the US side. So I do recommend that you speak to a trusted advisor in the US to ensure compliance before committing. That being said, if you are able to structure your US affairs in a compliant way, my team and I do work with a range of fund options that adhere to this structure. If you would like to learn more about this particular point, feel free to reach out. We'll be delighted to assist in the best way that we can. Now, I promised you some practical examples. So we're going to dive into 3 specific funds now that each serve a specific client use case, a specific use case for Golden Visa investors. The first one is a low-cost, diversified equity fund. Now, this option would typically suit an investor looking for a more balanced approach to risk with strong diversification and a demonstrable track record. Someone who understands the world of fund investing and is happy to put their money into a basket of stocks for the duration of the Golden Visa. So what does this entail? As with the majority of Golden Visa investment funds, the capital required is 500,000 euros in this case. The cost structure is expensive when compared to non-Golden Visa funds like ETFs, but this is actually one of the lowest cost Golden Visa funds available in the market today. It has a 2% entry fee, also called a subscription fee, and a 1.2% annual management fee that's chargeable every year. It also levies a performance fee when it delivers strong returns. This is an equity fund, as I've mentioned, investing only in the stock market. 60% is dedicated to larger Portuguese stocks, focusing on the PSI 20 primarily, and the other 40% is in line with an international strategy that delivers opportunistic growth across a diversified portfolio. Now, because this fund focuses primarily on a diverse range of stocks, and the Portugal approach is very value-driven, as we've spoken about, this is suitable for a balanced risk investor. Target returns are in the low teens, which is in line with past performance, which is just under 12%. Remember that many funds were created around 2022, 2023. Performance history is often limited in this space. This particular fund was created in March 2023. Now, this fund trades public equities only, so the investor can exit at any time. It usually takes up to a month to sell the positions and withdraw the capital, so pretty flexible. And very interestingly, for our American audience, this option does offer that jumbo account structure that we've just spoken about, which has been designed to accept investments from self-directed IRAs and solo 401ks. Again, if that's you, make sure that you are fully compliant on the US side before proceeding. This option is very popular as a catch-all. For those going via retirement accounts, those who are looking for a diversified fund that follows best investment practices, this is a very strong option on many fronts. So that is our first example to kick things off. Our second example takes a very different use case, just to illustrate the breadth of client cases that we work with here. And here, we are taking the case of a US national looking to relocate to Portugal using his Golden Visa. It looks like we've had a little bit of an incident with the presentation there, but let me try to explain. The typical investor here is someone looking to relocate to Portugal using his Golden Visa, someone who wishes to access Portugal's special tax status for new residents, often called EFICI or NHR 2.0. This only applies to people that are relocating to Portugal and becoming tax resident in the country. It is a powerful way to reduce your tax bill if you plan on becoming a Portuguese tax resident and living here full time. Okay. Let's get into it again. So what are we talking about in terms of details? As with the last option, the capital requirement is 500,000 euros. The cost structure is admittedly considerably higher than the last example that we just saw. Here, we're talking about the same flat 2% initial subscription fee, which is very much an industry standard these days, but the annual management charge, what is levied every year, is substantially higher at 2%. There is also a performance fee on returns. By all accounts, then, a more expensive option, but the global tax savings of having access to NHR 2.0 should more than cover this cost if you do end up moving to Portugal. So an overall benefit despite the more expensive structure. In terms of the investment mandate, it takes the same 60% exposure to Portugal, but actually divides that into two. So roughly 50-50 split between the Portuguese positions. So therefore 30% going into more established, larger businesses, focusing primarily on the PSI 20. That may be slightly higher than that 30%, but broadly around that level. Whereas the other half, 30%, may be slightly lower, depending on the day-to-day position. But that second half would invest into emerging tech startups in Portugal. This is, of course, a riskier idea, than going completely into the PSI 20, more established businesses, because we are having an exposure to earlier stage companies. But investing in startups in this way is what can allow the investor to qualify for this special tax status. So this is needed for this particular use case. The non-Portuguese 40% is invested into US instruments, and that prioritizes the S&P 500 in the first instance to provide exposure to the US and diversify the portfolio. Now, this option is not only available to Americans, but it has been specifically set up with Americans in mind. So all US reporting, PFIC compliance, etc. is handled by the fund. It's also why 40% of fund exposure is directed to US assets, as in my experience, many Americans prefer to keep at least some weighting in the US. The risk profile that we're talking about here is more adventurous, given the exposure to tech startups. Target returns are to provide steady growth over the long term, generally keeping pace with the Portuguese and American markets where possible. Now, this is rather an innovative structure to access that special tax status. So there is no real performance history to sink our teeth into. The fund was actually launched in 2025. However, this investment has very much been designed with the Golden Visa in mind. It is more of a fixed term rather than a liquid option, which is what we saw with the first example. Here, the investment is a fixed term of 6 years. Again, that's designed to correlate with standard Golden Visa required timelines, but there is also a possibility of an early exit if the investor requires it. Now, as I mentioned, this investment allows the possibility of qualifying for EFICI or NHR 2.0, however you choose to call it. What that essentially does is it grants significant tax exemptions on non-Portuguese income if relocating to Portugal, and also some benefits on your Portuguese source income. This can save new Portuguese residents thousands upon thousands of euros potentially in many, many cases. Essentially, what it does is it offers a flat 0% tax on most foreign income sources and a flat 20% tax on Portuguese source income. Rather enticing if you are planning to move in the short term and can tolerate the investment risk. Now, if this is a topic that you would like to dive into in greater detail, that's well beyond the scope of today's session. The benefits are very much dependent on your circumstances and what your financial affairs would look like should you move to Portugal. So I would recommend getting in touch with myself for an introduction to a tax professional or going directly to a local tax specialist in Portugal to explore this topic. The last example switches the focus quite considerably. Now, let's hope that we don't have the same formatting issue on the presentation here. We are about to find out. This is our most popular investment currently, and for very clear and obvious reasons that are about to become apparent. Oh, good, it works this time. This is a hospitality-focused option that is more tailor-made for the investor looking for an easy access investment that they can just set and forget for their Golden Visa journey. Something with a low entry cost, security guarantees for peace of mind. For those of you that have been paying attention, I've spoken about this option on this channel before, so it might not come as a huge surprise for many of you. This is a unique option. Why? Because it offers you the ability to access the Golden Visa for 20% less initial capital than other investment funds. The capital required is just 399,000 euros, leaving you extra money to keep in your current portfolio of investments or to use for other things. There are also effectively no running costs. There are no entry fees, no management fees, no performance fees, no exit fees. This is a fixed return investment that pays you a return of 101,000 euros. This is paid to you upfront as an accelerated return on investment covering a fixed investment term of 6 years. Again, that is in line with the Golden Visa journey. Because the qualifying investment threshold is 500,000 euros, this accelerated return on investment must be reinvested to ensure that you qualify for the Golden Visa. So essentially 399 from you, 101 from the investment counterparty. Now, after the 6 years, when you exit, you will be paid a lump sum of 500,000 euros. So you contribute the 399, you get that 101 as accelerated return. Both are invested, and at the end, at maturity at 6 years, you're able to withdraw both as your final capital withdrawal, 500,000 euros. So essentially, what does that mean? It means that you are contributing 399,000 euros at the beginning in practical terms and receiving 500,000 euros back at the end. Now, this investment is made directly into a Portuguese hotel chain, the Navigator Collection. There are dedicated videos on this channel discussing the Navigator Collection in further detail. I will be publishing further videos on the Navigator Collection later on this year as the investment case evolves and continues to develop. But we have been working with the Navigator for a number of years now. It has garnered an awful lot of interest and they have grown significantly during that time. I will place a link to those videos at the end of this video, also in the description box down below my head. As I mentioned, this is a fast-growing, very successful hotel chain across various locations in Portugal, servicing the upper mid-range of the hospitality market. Most of their assets are in the 4-star range. They do have some 5-star assets, and they do have some 3-star assets as well, but most in that 4-star, upper 4-star really range. Your investment is also secured with this particular option, which makes it very interesting. It's secured using property assets, essentially apartments in the chain's hotels, which will act as a security guarantee for your peace of mind when making this investment. As I mentioned, we have worked with this particular investment provider for many, many years now. They maintain a 100% track record of on-time investor exits, so we've never had to use that security guarantee, but the fact that it's there, the fact that this is an asset-backed investment can be of some comfort, especially when you're making an investment on the other side of the world. Now, this particular investment option is ideal for an investor looking to commit the minimum amount of capital within a secured framework with a guaranteed fixed return on investment. And let's be frank, a fixed return of 101,000 euros is rather attractive, I must say, especially when you consider the low entry point and the asset backing. This is the case that I'm most frequently contacted about, that I'm most frequently asked about, and it's pretty clear why. Wrapping up then, so those are your 3 examples. There are many, many more in the market. Of course, if you would like to understand the most suitable option for you, the best way to do that is through a one-to-one call. There will be a link to book directly into my calendar using, there will be a link in the description box down below my head. There's also the QR code on the right-hand side of the screen there, which you can scan. It will take you to a booking widget where you can see my calendar and book some time in. But anyway, why would you do that without knowing who I am? If you are new here, my name is Jonathan Ralph. I am a partner at Holborn Assets. We are the market leader on the Portugal Golden Visa. We have been for a little while now. I'm backed up by a very diligent team of professionals that you will never see on this channel, but that do essentially prop up everything that we do here. I'm very privileged to be blessed by a wonderful team of people, and that's one of the reasons why we have such a good reputation in the market. You will meet them if you do work with us. We are very proud of the awards that we've won for our work, particularly a recent win for excellence in citizenship services at the International Investment Awards. We are well regarded on Trustpilot as well. Feel free to read about some real client experiences on there if you have a spare moment. There are quite a few reviews on there. I believe we're approaching 3,000, or may even have more than 3,000 at this point. So you can also filter those results by searching using my name and get some more targeted user experience or client feedback, client stories that you can read about. Do be aware, we are not just a Golden Visa agency. We cover all elements of international financial planning for our clients. That includes financial planning should you ever decide to finally relocate to Portugal. We're there to help. We actually believe that Holborn is the largest international expat-focused financial advisory practice working in the world today. So we do carry a certain degree of influence in our various markets. And incidentally, if you do decide to work with myself and my team, you are working directly with Holborn, no agents, no middlemen. Essentially, this will give you access to the best available pricing, a direct relationship with us, which is good and more efficient for all concerned. If you would like to get in touch and see what we can do for you, feel free to book in that meeting with yours truly. I mentioned there is the QR code on the right-hand side of the screen. There's a meeting link in the description box down below my head. Alternatively, you can also contact me via email. That's jonathan.ralph@holbornassets.com. And that's it for today. I promised a packed video, so I hope this was helpful. If you stayed to the end, thank you for sticking with us. It's going to be a very, very long video today. If you would like to learn more, I would invite you to book in for that free consultation with me and my team. We are the #1 Golden Visa agent in Portugal. I like to think for a reason. That means we have access to exclusive investments that are only available via my team. So I would strongly advise speaking to us before you lock in any particular investment choice and move forward. You might just be surprised at what we can achieve for you. Consultations are free. You can book in using the QR code on the screen. Once again, on the screen on the right-hand side, the booking link in the description box down below my head. There should be a video that is about to pop up now-ish, but it will be there on the right-hand side of the screen in that white box, which will effectively take you through the details on the Portugal Golden Visa program itself if you're not entirely sure of program details at this stage. It will take you through everything that you need to know before ultimately deciding to move forward or not with a Portugal Golden Visa application. So check that out next if you need to refresh your knowledge. Don't forget to subscribe to this channel for the latest updates as they are released. As always, thank you very much for your time, for spending this time with me today. Have a wonderful day, and we will speak again very soon. Bye for now.